Let's get one thing straight. January 2021 wasn't history. It was a system diagnostic. It was the moment the simulation we call the market stuttered. And for a second, we all saw the code behind the curtain. The suits, well, they've been pushing patches ever since, trying to convince us it was just a one-time bug. But we're going to jack in and see what the data really says.
Okay, before we go down the rabbit hole, the mandatory guardrail. This is purely educational banter, all right? It is absolutely not financial advice. The market's a casino, a high-stakes poker game. Always remember, the house has an edge. But sometimes, just sometimes, you can spot the dealer's tell.
So, first up, let's talk about the official story, the neat, tidy little package they wrapped up and fed to the mainstream media. The bedtime story the suits want you to believe.
And man, it was a beautiful story. A perfect David versus Goliath narrative. The media couldn't get enough of it. Reddit's own co-founder, Alexis Ohanian, he summed it up perfectly. It felt like a revolution, right? The little guy finally fighting back.
The story they sold us was simple, almost too simple. You've got the apes on Wall Street bets, a bunch of retail traders, and they decide to pile into a stock the big Wall Street hedge funds were betting would fail. The goal? A classic short squeeze. It was the perfect Main Street versus Wall Street fairy tale. But we're here to look past the fairy tale, aren't we?
By late January 2021, the headlines were screaming that short sellers had lost a staggering $6 billion. And for the mainstream narrative, that was the climax. The little guys won, the big bad hedge funds lost. Story's over, roll the credits, right? Yeah, not even close. That's where the real story begins.
And this is where the glitch stops being a glitch and becomes a full-blown system failure. This is the moment the so-called free market showed its hand. They didn't just rig the game, they unplugged it from the wall. Just look at this chart. You see the slow burn, and then boom, rocket fuel. January 26th, Elon drops that one-word tweet, "Game stunk," and the afterburners just ignite. The price goes absolutely parabolic. And then, January 28th, at the peak of the mania, they hit the kill switch. Multiple brokers, with Robinhood being the most famous, shut down the buy button. You could sell, oh yeah, you could panic sell, but you couldn't buy.
Which brings us to the one question that matters, the one they tried to dance around with excuses about volatility and protecting investors. Come on, if this is a free and fair market, why would you ever unplug the buy button right when the house is about to lose its shirt?
So forget their excuses. You don't listen to what they say, you watch what they do. You follow the data, you follow the money. The real story is always buried deep in the plumbing of the system.
And to understand this machine, you have to understand its fuel source, payment for order flow, PFOF. You know how trading is free on some apps? Well, here's the secret. If you're not paying for the product, you are the product. Your broker takes your buy order and sells it to a giant market maker who then gets to execute it. That's the game behind the game.
And this slide right here, this lays the conflict of interest bare. On the left, Robinhood's PR statement, "We did it to protect you." But on the right, you have the data trail. 40% of their revenue, 40%, came from PFOF. And their number one customer for all those trades? A little firm called Citadel Securities. Your free trades were literally their billion-dollar business model.
And here it is, the connection that blew up on Twitter. Citadel LLC, the sister company to Robinhood's biggest client, injects $2.75 billion into Melvin Capital. You know, one of the main hedge funds getting absolutely liquidated by the GME squeeze. You see the conflict, right? The neat little triangle of money flowing between the broker, the market maker, and the hedge fund that was losing the bet.
But here's the thing. This PFF connection, it's almost a distraction. Yeah, Congress held hearings, the media focused on it, but the real vulnerability, the actual crack in the matrix that allows for this kind of thing to happen, it runs so much deeper. It's a fundamental flaw in the system's plumbing, and trust me, we are about to get to it.
And while the apes were fighting just for the right to buy a stock, who was actually cashing out? Let's look at the ledger. You got hedge funds like Senvest walking away with $700 million in profit. You've got giants like BlackRock positioned for a potential 2.4 times billion-dollar gain. Insiders sold off at the top. Suddenly, that whole David versus Goliath story gets a lot more complicated when you realize some of the Goliaths were just betting on David all along.
See, the suits thought turning off the buy button was checkmate, game over. But all it did was change the game. It forced retail to get smarter, to evolve. to find a new weapon, a counteroffensive aimed not just at a stock, but at the system itself.
And that weapon is called the Direct Registration System, or DRS. Look, the simplest way to think about it is this. It's the market equivalent of taking your cash out of the bank and stuffing it under your mattress. It's about taking your shares out of the Wall Street casino and proving you actually, truly own them.
So, how does this work? Right now, your shares are probably just sitting in a giant digital vault called the DTCC, held in your broker's name. They tell you you own them, but your name isn't actually on them. DRS changes that. You tell your broker to pull those shares out of the communal vault and put them directly in your name on the company's own official books. The analogy is perfect. It's taking the deed to your house out of their safe deposit box and putting it in your own safe at home.
And don't think this is some fringe movement. We're talking about roughly 200,000 individual investors. 200,000 people who took the time to learn the system's arcane rules just to pull their shares out. It's one of the biggest, quietest, most coordinated migrations of assets in modern history, and it's happening right under their noses.
Okay, so it's time. Let's close that loop I opened earlier. PFOF, DRS, turning off the buy button. All of these are just ripples on the surface. They're all reactions to the real glitch, the fundamental design flaw that this whole saga dragged out into the light.
Because the GameStop event, it wasn't the disease. It was just a symptom, a really, really loud symptom. The system itself has a pre-existing condition, and GME just triggered the first massive public flare-up.
Now look at this other data point, the run on Silicon Valley Bank in March 2023. It seems totally unrelated, right? A bank, a meme stock, but look closer. The pattern is identical. A rapid, digitally fueled contagion. An information wildfire spreading through social media that brought a massive bank to its knees in hours, not days or weeks. And we have the data to prove it. Academics actually analyzed the SVB collapse. They found that high Twitter volume could predict stock losses by the hour. Tweets with negative words, especially keywords like contagion, had a 10-fold impact. The takeaway is simple. Information now moves at the speed of light, but our financial plumbing, it's still running on dial-up. So here it is, the real glitch. It isn't a stock, it's not an app, it's the network. The suits love to use dismissive labels, meme stocks, bank runs. It makes these events sound like silly fads. But what if they're not? What if they're actually involuntary public stress tests on a system that is far more fragile and dangerously interconnected than anyone in a suit is ever willing to admit?
We are watching this chart like a hawk. And while you wait for the next candle to print, go grab your free gear. All the links are down in the description. Hit that like button, subscribe to the tribe, and I gotta know, what do you think the next public stress test will be? What's the next crack in the matrix gonna be? Drop your theory in the comments. Apes together strong.